G'day. Welcome to today's market cycle outlook situation on the Dow. I've formed the opinion that the lift out of the recent low is probably larger than my current phasing suggests, and my current phasing is suggesting it was a 20-week low. It doesn't look too bad here on the monthly, but when we look at the weekly, we see that this has been an extremely strong lift out. And if we go back and look at previous 20-week lift outs, this one back here, this one back here, this one back here, April 2024. The current lift out is considerably stronger. So my intention is to reassess, and in doing the reassessment, we need to get a copy of this because a lot of it's quite fine. We'll label this alternative. We're going to go as far as the 9-year, and we'll just put some of these things to one side because relabeling will be quicker that way. So we come back to the 90-year low. I have it on this phasing allocated as the 23rd of March, 2020. And those people who understand my propensity to the equinox for large lows, this one missed by 2 days. That's not bad. So the 90 years goes back to July of 1932, the Great Depression low. Well, the thing is, if you add 90 to 1932, you get 2022. And 2022 is this one here. And so we look at these alternatives and we say, well, why would I have chosen the 2020 low, this one here, which is, people call it the COVID low? One very good reason is because it lobs right in the middle of this 9-year orb. Now, this comes from the low in 2003. So if we go back to 2003, on the 12th of March, missed the equinox by just a few more days there, that low in March of 2003, if we add 18 years to that, we get 2021. Well, stuff me, 2021 lives right in the middle of 2020 and 2022. So right from the beginning, I was not sure of exactly where the 90-year should be placed. And I chose 2020 without certainty. Now, what are the cyclic arguments for 2022? Well, comparing 2020 to 2022. 2020, the drop was 2 months based on this chart, 2 months. Compare that to the number of months dropping in to the 2022 low, considerably longer. And then we look at the bounce out the other side. Now, the bounce is more important. And if you look at the bounce out of the COVID low in 2020, yes, it went up. It went up as far as 2022 January. But look at the bounce out of 2022's low. It's bounced out quite strongly and is still going. The bounce has been more significant out of the 2022 low. So there are some cyclic reasons why we would consider 2022. Let's do the update and see what it looks like. So we need to take this 9-year off here from 2020 and put it at 2022 and ask CycleMaster to update. So CycleMaster places a large arrow, which is a reminder to us that we've put it there. CycleMaster hasn't put it there. We've done that. And we get these boxed X's because several of these previous cycles have had a larger low poke its nose into those smaller cycles. And so normally the starting low and the ending low of a cycle, they are the lowest lows. In this case, with the boxed X's, this low was lower in several smaller cycles. So we have the 9-year, nothing's changed. Some labeling. So what effectively we've done is stretched out the 9-year cycle. Some of this needs to be changed back here prior to the 90-year low here at 2022. I will rework that, but at this point in time, I'm more interested in what's going on after 2022. And it seems to me that the cycles might have shortened. We tend to see earlier lows in strong uptrends. So, for instance, there may have been a low there, there may have been a low there, very short. That's a clear low. And then we've also got another low there. Let's see what Cycle Master says about all of that. So this first one is short, 12 months. This next one is 18 months. And that's back to 11 months. That's very short. Let's just update cycles, see what that looks like. And that's essentially a 4.5 year. So we've got 18 months and 18 months, that's a 3 year. And then another 18 months gives us 4.5 years. Well, if that's a 4.5 year cycle low, that certainly explains the strength of the lift out. Let's just get some more of this. So that one's a 3 year. That one's an 18 month. It can probably go up the top, given that it's submarines. That can also go up the top. And so 23.10, 25.4, that's correct. And okay, so this needs to be carried through to the weekly and also carried through to the daily. So I'm not going to bore you with a couple of hours of that. But how does this look? Well, I'm certainly more comfortable with this low potentially being a 4.5 year low. So it has to hold up on the weekly. It has to also make sense on the daily. So I'll swing into that. Stay tuned. Thanks for watching.